What are you making of the movement we're seeing on the NSE right now? Yesterday, the market closing 0.5% lower.
I think the market is just continuing the trend that we predicted towards the end of the year. The market is actually very slow at this point in time, as investors are looking for direction for 2010. The obvious thing here is that people are basically looking to rebalance their portfolios, and a number of the institutions that have suffered in 2009 are continuing the trend or the downward trend in the market. I think that we will continue to see choppy trading until the end of the year. The trend for the NSE at best will be flat, and you know, at the worst, we're expecting between a 3 and 5% decline before the end of the year.
Femi, as I was saying, you know, it was the banking sector that really came under pressure yesterday, with First City Monument Bank and GT Bank just managing to buck that overall trend. But what we have seen over the past week is some preference for banking shares. So let's take a look at what's driven the banking sector higher of late and why we're seeing this pullback now.
Well, I think what did drive the banking sector slightly higher in the last at least 3 to 6 months, and I think we should take that into proper perspective, because the banking sector itself has been divided into 2 distinct sectors. First, you have the banks that are perceived to be stronger as an outcome of the CBN reviews, and those banks have actually bucked the trend, the general downward trend of the market. And then you have the perceived weaker banks who've shed between 70 and 80% of their values post August 15th, and probably 96% down from their heights. The reality is that the market is looking for direction. The sort of numbers that we saw from Oceanic Bank has shocked quite a lot of players in the market, and people are basically saying, look, is there actually some hope for the rest of the sector if numbers are coming in at such at such levels that we've seen from some of the banks. We've seen some of the largest losses ever in the history of the Nigerian economy being declared in the last 2-3 weeks. And that is playing a significant role on the direction for the market.
While some may be hopeful, though, I mean, we've had some fund managers here in South Africa warning of plans specifically by South African banks, and First Rand is a clear example there of South Africa's intentions to expand into Africa, saying that heading into the territory could be high risk at this stage. What's your view to that kind of comment?
Well, I think I disagree with those comments, and my reason for disagreeing is very, very clear. If you look at the way Standard Bank has performed in the Nigerian market, in spite of the risk or the risk attached to the market locally, they have performed extremely well. The reality is that if you've got the right risk management framework, and you've hired the right people, and your corporate governance, structures are above board, you will succeed in this market. And that's the way we've seen all the other institutions that haven't been affected by the total meltdown in the banking sector. There's some banks that are beacons for the rest of the industry, and they haven't suffered the sort of losses or the sort of provisioning that we've seen for the local market. So I think that, if South Africans banks actually miss this opportunity to acquire Nigerian banks on the cheap, they will look back in 12 months' time and have their fingers in their mouth. It's actually that simple. You're getting banks at probably the cheapest you're ever going to get them, and you're getting a sector that's desperately looking for credibility. Yeah. So institutions with credibility, this is the time you want to be in the Nigerian market.
So let's get into some detail there, Femi, because it was actually Koki Koiman, the head of Sanlam Investment Management Global, that has been very frank, saying that on the acquisition front, there are no quality assets available. What would be a quality Nigerian asset within this space in your books?
With all due respect to Koki, that is absolutely ridiculous. If you look look at it, you're talking of banks that probably have an average branch network of 200-300 service points. You're talking of institutions that have grown their brands for the past 15, 20 years, and in some cases over 100 years. The reality is that these banks have suffered a bit from obvious mismanagement and possibly, to some extent, poor management skills. I believe that there are a number of institutions that would be an investor's delight today. And I could start to list names for you. Diamond Bank is doing extremely well. First City Monument Bank, Sky Bank, GT Bank, First Bank, UBA, Zenith Bank. These are institutions that have weathered the storm and have balance sheet sizes, that would excite any decent financial institution looking at an entry into the Nigerian market. So to actually classify the entire banking industry as a risky industry, for me, it probably sounds naive. And one has to actually say that, look, this is an opportunity to look at a market that's got 150 million potential customers, a market that's got 2 million corporate customers. I don't see where the big
We are
risks
looking,
are
though,
here.
at quite intensive capital injections to start off with, because while these banks might seem cheap right now on a valuation level, analysts have said that what makes them expensive is the fact that there's lots of things to be fixed after the acquisition. Is that a possible hindrance moving forward to any M&A activity?
I actually don't think so. One of the things that I believe is probably possible today, and given the sort of market that we've seen, is that the banking sector itself will get a lot of support from government, whether we like it or not. There are banks in the market today that are very strong. So even if an international institution was looking at the market and looking to come into the market, I'm saying to you that in the event that you don't want to buy one of the shaken banks and you're looking to buy a well-structured and established bank, there is an opportunity for you to do that. And you definitely don't need significant capital injections. And I think for the first time, for the first time in a long time, you can actually do a transaction with a Nigerian bank that focuses more on a capital injection rather than, buying stock off the secondary market.
Do you see any foreign banks, Femi, actually starting greenfield projects in the current environment?
I think it would be very difficult for any bank to come into Nigeria and start a greenfield project. The banks who've done it, Standard Chartered has done 10 years in Nigeria and probably have 10 or 15 branches and are looking to grow aggressively. And you're talking about Standard Chartered Bank, which is obviously an established brand. I think that the opportunities that the Nigerian market has today, and with the sort of branch network that we've seen in the last 2 years, with branch networks, growing over 50-60%. It's just foolhardy. You need to come in with a balance sheet of 25 billion naira to get a banking license. But we believe that, look, if you spend 2-3 times that, you can get scale from day one. If you're coming in with a strong brand, the market will accept your brand. Because the market is basically looking for credibility.
Well, Femi, on that note,
that's what we think will drive the market going forward.